Welcome back. Let's switch focus to sanctions on Russia now. Britain says it has impounded a plane connected to a Russian billionaire under new aviation sanctions, which gives authorities the power to detain any Russian aircraft and to ban exports of aviation or space-related goods to Russia. The measures to strengthen action against Russian aircraft means it is a criminal offence for any to fly or land in the United Kingdom. The ban includes any aircraft owned, operated or chartered by anyone connected with Russia or designated individuals or entities, and will include the power to detain any aircraft owned by persons connected with Russia.
Already on the very first day of this invasion, Thursday 2 weeks ago, banned Aeroflot, banned commercial airlines. The following day, banned private jets as well. So they were already not allowed. However, there were potential loopholes, and I also wanted to make the issue a criminal one. So last night, I also signed a law which closes off some of those loopholes to do with trying to work out the ownership of some of these aircraft. There is one such aircraft on the ground at the moment at Farnborough that I've essentially impounded whilst we carry out further investigations for the last few days. And it's very important that we have the laws available to enable that to happen. 760, and I was going to go on to say that anyone who's seen the pictures on television, our heart goes out. We want to support, and we're doing that in close coordination with President Zelensky and the Ukrainian government, who want to, broadly speaking, keep people as close to Ukraine as possible. But we've got some very large visa schemes coming into place with very large numbers. And of course, people would expect us to make sure that we know exactly who's coming to the country, which is why the process takes a little bit of time.
And following the announcement of bans on Russian oil by the US and UK, the International Energy Agency says it is ready to bring more oil to the markets by releasing additional stocks. Head of the IEA says, Fatih Barrel, says the agency will also come up with an action plan to reduce oil in a hurry. Oil prices rocketed higher after Russia, the world's second largest crude exporter, invaded Ukraine, and the West toughened sanctions on Moscow, stoking fears of supply disruptions to an already tight market. The US and UK ban on Russian oil and the EU ending its reliance on Russian gas is all part of their promise to step up the economic response to the invasion of Ukraine. US President Joe Biden said the move targeted the main artery of Russia's economy. Energy exports are a vital source of revenue for Russia, but the move is also likely to impact Western consumers. Major brands have, meanwhile, continued to pull out of Russia, with McDonald's and Coca-Cola the latest to leave. Russia's economy is heavily dependent on energy. It is the world's third biggest oil producer, behind Saudi Arabia and the United States. For more on what all this means, we have joining us on the program Mr. Tilewa Adebajo, CEO of the CFG Advisory. He's also an investment banker and economist. Thank you for joining us on the program.
Good evening. Thank you very much.
Let's begin with the ban by the United States. What will it mean for oil and gas prices?
Well, as you can see, oil and gas prices are already over $100 a barrel, and traders are now expecting that within the next month or so, if the hostilities continue the way they are, and as the sanctions are beginning to bite, we could see oil at an all-time high of about close to $200 a barrel.
In terms of this, what does this also do to Russia's economy? Some have said that Russia might not lose much if prices rise to over $200 a barrel. Do you think this would in any way affect Russia's income reserves, even though some people say, yes, this is part of what is being used to fight the invasion in Ukraine?
Well, don't forget that Russia is fully integrated into the global economy. Even though the Russians might have a different ideology, they're part of a world and a global economic order. And as you can see, there have been significant amounts of foreign direct investments by Western companies into Russia over the years. The big oil companies are present in Russia and are exploiting Russian oil resources. There's that massive gas pipeline two pipelines, as a matter of fact, going in from Russia into Western Europe, which is causing a bit of a problem now in terms of energy security. So Russia is interdependent with the global economy, and these sanctions, of course, are going to hurt Russia, as well as they're going to hurt the West and the rest of the world. What you're seeing now is that there's been a shift, and Russia is now trying to form a trading bloc with China and India, and taking a look at trying to look at alternative means of trying to exploit its resources. But all these other economies, for instance, China, most of China's exports are to the United States, and the Chinese government is holding the highest levels of U.S. Treasury reserves in the world. So there's a lot of interdependence, and China is going to tread very carefully to ensure that it doesn't upset both the United States and Russia.
So in your assessment, will this hurt Russia in any way? Because, I mean, after the latest ban of the US, critics of Russia said that sanctioning its energy exports will be the best, perhaps the only way to force Moscow to pull back.
Yes, it's going to hurt Russia, definitely, although they build up huge foreign reserves. It's not sure whether they're going to be operating at an alternative level with cryptocurrency. But eventually, their biggest exports are oil and gas. And Europe needs the gas, the US needs the oil. But now that the US is going on the oil and, damning the consequences, it is going to hurt them on the long run. There's no doubt about that. But then it's a zero-sum game in the sense that the rest of the world is now looking at $200 a barrel for the price of oil. And of course, the impact of that is inflationary. You do understand that we were just coming out of this forced recession as a result of COVID and the lockdown. And that recovery was fueling inflation, which was expected. And globally, you could see that inflation was high. And of course, the central banks responded by increasing interest rates. So the cost of borrowing and price levels, consumer price indexes were going quite high. Now you impact that with the war, which the direct consequence is a high rise in the cost of energy. And energy is a very important input across the globe. All the transportation, logistics, all these costs are going to be transferred eventually to the consumers. So this war is going to cause a massive inflation across the globe, and it's going to hurt all the global economies. And if we're not careful, it might lead us into another recession.
And the EU is part of that global economy. And on the other hand, they're planning to phase all energy imports by the end of the year, meaning that for now there is that heavy reliance. Also, Russian President Vladimir Putin has threatened to cut energy exports to Germany. And the talk is that Germany is saying it won't let itself be threatened, and that its oil and gas reserves would also help it overcome difficulty, perhaps the winter. But also, the Federation of German Industries, they've warned against a ban on Russian energy. The president saying that the embargo threatens to punish Germany and the EU more severely than the aggressor, in this case, Russia.
Yes, like I've said, I mean, if the first gas pipeline was very successful, which went through Ukraine, as you might know, and there were a lot of challenges with Ukraine and the throughput prices through Ukraine. So the second gas pipeline, which is built but yet to be commissioned, actually went undersea. So there were not going to be any issues that they've had with throughputs through Ukraine. And even that has not been commissioned at the moment. So there's massive investments with gas pipeline, especially to Germany. So Germany, in the interim, has to look for alternatives, probably look to the Middle East and Qatar. But Qatar traditionally sends its gas to Korea and Japan and China. And those involve long-term contracts. So the search for alternative sources of energy for Europe will take a time. And that transition definitely is going to be very costly. So, like I said, all this can be leading to another recession.
Solutions
because all the economies are interdependent.
All right. Solutions by, or rather moves by the IEA and OPEC, to have more oil in more supply. Do you think that will perhaps ease things?
Yes, definitely. I mean, all the OPEC members, including Nigeria, will be expected to increase their production right now. And it's ironic for us in Nigeria because the impact of these oil prices for us are not being felt. So even if OPEC should ask us to increase our output right now, we do not have the capacity because even our quotas that we have right now, we're not meeting our OPEC quotas at the moment. Now, with this chaos in the world with the war, it provides Nigeria an opportunity, but because we do not have the productive capacity, we can't even increase production if we are asked to. So all the other oil-producing countries, like you see, America is reaching out to Venezuela, Iran, Iraq, Saudis, they're going to start increasing their production to be able to meet the shortfall in demand. So basically, a lot of all the OPEC countries will benefit because they will be able to increase their quotas to be able to fulfill that demand. And Saudi Arabia is the biggest oil producer, outside the United States and Russia. And definitely, I think the Saudis can fill the slack. And so they will benefit. But $100 oil, because of our fuel subsidies and the way our economy is structured with our fiscal deficits and fiscal issues, we're unable to take advantage. Because what will happen is that the size of our subsidy in Nigeria is going to go up. So the biggest line items in our budget today is debt repayment and fuel subsidy payments. And the third will be defense. So high oil prices are going to impact Nigeria negatively. So that's just the irony, unfortunately.
And that is sad to hear, that we won't be cashing in on this. But if we move back to some of the other sanctions we're seeing on Russia, and that is big companies leaving the country, this also hurts Russia, doesn't it?
Yes, like I said, Russia is part of the global economy. Their ideology might be different, but the economic philosophy is more or less the same. They're part of the global economy. They're a big supplier of energy to Gazprom, is a big supplier of energy into Western Europe, especially to Germany, which is a powerhouse economy. There's trade between Russia, China, India, and the United States also. So there's interconnectivity, and Russia is part of the global economic order, even though it might have different philosophy or ideology. So it is going to impact Russia. Gazprom, the likes of Gazprom are going to be affected. Aeroflot, the airline, is also going to be affected. So there are issues and there are problems that, we need to deal with. And like I said, the global economy is interconnected and everybody needs to play their card because at the end of the day, the sanctions are not only going to hurt Russia, but the West also is going to have to bear the brunt with high energy prices. That's the consequences of this war.
Also earlier today, a member of the Ukrainian parliament was saying that some of these companies should not only suspend business in Russia, they should not also pay their taxes, they shouldn't send, no cents or fees should also be sent to Russia as well. But looking at the efforts of the decisions of the UK and the US, and then, of course, looking at what the EU is planning to do, and that is a phase out, what do you think might be Russia's response in hurting this decision that it, of course, definitely thinks will hurt Russia back?
Well, like I said, if Russia holds back its gas supply to Western Europe, that's close to $200 billion worth of investment at stake. So it's going to lose revenues. So if Russia cuts back gas supply to Western Europe, it's going to lose revenue. If there are no gas supplies to Western Europe, then they're going to look for alternative sources, which on the short term will be more expensive. On the long term, they'll eventually find a solution as an alternative to Russia. So if Russia comes back on stream, on the long term, Western Europe will have at least understood that Russia is not reliable. So there's going to be a shift to other countries in terms of looking at that. Is Nigeria ready to be able to pick up the slack? Are we able to ramp up our LNG? We have Train 7 coming up, Train 8. So these are the opportunities that Nigeria could have been taking advantage of. We have more gas in Nigeria than oil reserves. So if we had built capacity, we have another project like the OK LNG that has not been done. If the OK LNG was online, we could begin to meet this demand in Western Europe. So these are the issues because Europe now is going to be looking for alternative sources of energy and energy security. So, like I said, it's a zero-sum game on both sides. So the people putting up the sanctions know that they have to take those losses. All those companies know that on the short term they're going to lose their income from the Russian market. But again, it's a stand and a cost that they're willing to bear. So there's going to be losses definitely on both sides.
Yes, looking at Nigeria and what it has to gain or lose, you're saying if. What do you think are some of the things that we can do, and this is to meet up with, the fallout of all of the sanctions?
Well, what is clearly happening is that we cannot continue to rely only on LNG, the current LNG that we have. Yes, we've made a final investment decision last year on about 7 billion on LNG train 7 or 8, I'm not sure which one that quite is, which is a move in the right direction. But we also have other gas reserves. Nigeria has more gas than oil. And gas is regarded as more of a sustainable energy source and not much of a fossil fuel. So, okay, LNG is there. We need to look at that. Can we relook at that project and maybe sell that to the Europeans right now? That might be a viable aspect. Olokola is there. It's a natural deep sea port. And all the studies for that has been done. It has reached final investment decision, and all of a sudden the project was stalled. So we need to be able to maybe take a look and make that investment. But these investments are long-term investments. This is a project we should have done 15 years ago, but we didn't. So if we had done all these gas projects to be able to tap our gas potentials, we will be benefiting. And that is why you're seeing the LNG going to train 7 or train 8 right now. So we need to look at other sources of our gas and to be able to develop our gas potentials. And this is why we've not made the delay in the petroleum industry bill has meant that we have not put in a lot of investments in that sector. So it's important we take a look at that sector. In 1977, Nigeria was producing 2.5 million barrels of oil a day. Since 1977, we have not hit $2.5 million a barrel. In fact, we're down to $2 million a barrel. And our capacity at 2 million barrels, currently we can't even meet that production. So it shows the lack of investment in our oil and gas industry. We need to step that up, because if we do, it will benefit this country immensely. And when these European countries go through their challenges and the power play of the geopolitics of the global superpowers, Nigeria can benefit, because Nigeria, as a stable West African democratic country, can provide energy security to Western Europe. And, that is how we need to begin to position ourselves. But if we do not make those investments, we can't take advantage of that. And that is why Qatar, as small as a country as it is one of the largest gas producers and suppliers in the world. And the whole of Japan, North Korea, China is dependent on Qatar gas. So, and these are global players, and this is what we need to focus on our geopolitical and economic strategies.
And sadly, in a war such as this, even though Ukrainians are being displaced, some people will be benefiting from what's happening there. But we'd like to thank you, the realities of this invasion. Thank you, CEO, the CFG Advisory Investment Banker and Economist, Mr. Tilewa Adebajo. Thank you for joining us on the program today.
Good evening.